Did you know that more than 45 million Americans are using self-directed IRAs to take control of their retirement savings? But what are the best things to invest in using this powerful tool? That's exactly what we're diving into today. Welcome back to Factful Finance, the place where we take the guesswork out of your financial future. Today, we're tackling one of the most important questions for retirement planning. What are the best things to invest in using a self-directed IRA, or SDIRA? Before we get started, a quick disclaimer. The information shared today is for educational purposes only. Nothing should be construed as personalized advice, and I encourage you to consult a professional for guidance tailored to your individual needs. All right, let's jump into it. First, let's break down the basics. A self-directed IRA gives you the ability to invest in a wide range of assets beyond traditional stocks and bonds. You have the flexibility to invest in things like real estate, precious metals, private equity, and even cryptocurrency, all within a tax-advantaged account. But with great power comes great responsibility, so you need to make sure you're choosing the right investments. Let's start with some of the top options. 1. Real estate. Real estate is one of the most popular investments for SDIRAs. Why? Because it offers a tangible asset that can provide long-term growth and income. Whether it's single-family homes, multifamily units, or commercial properties, real estate can be a great way to diversify your portfolio. Imagine this. Benjamin, who's 35, uses his SDIRA to buy a rental property. By the time he's 60, the property has appreciated, and he's generating consistent rental income. Tax deferred. That's the power of real estate in your SDIRA. 2. Precious metals. Gold, silver, platinum. Precious metals are seen as a hedge against inflation and economic downturns. Experts recommend having precious metals as part of a diversified retirement portfolio. If inflation rises or the market experiences turbulence, metals like gold tend to hold their value. For instance, Amelia, a business owner in her 40s, invests part of her SDIRA in gold coins. With the recent economic uncertainty, her investment has been performing well, helping her safeguard her retirement savings. 3. Private equity and startups. This is where things get interesting. Investing in private companies or startups can offer high returns, but it comes with higher risk. It's important to understand the business and its potential for growth before diving in. Liam, an investor in his early 40s, decided to invest in a promising tech startup through his SDIRA. It was a high-risk decision, but within 5 years, the company went public, resulting in an outstanding return for him. 4. Cryptocurrency. Now this is a hot topic. Cryptocurrency investments, like Bitcoin and Ethereum, have been making waves in retirement accounts. While still volatile, many investors see crypto as the next big thing. But like any high-risk investment, it's important to only allocate a small portion of your SDIRA to cryptocurrency, especially if you're just starting out. Olivia, who's in her 30s, took a calculated risk by adding a portion of her SDIRA into Bitcoin. After a few market swings, she's seen a solid return, even though she keeps her main focus on traditional investments. Number 5. Tax liens and notes. Another option is tax lien certificates or tax notes. When property owners fail to pay their property taxes, local governments issue tax liens. You can buy these liens at auction, and if the property owner doesn't pay, you could get the property or earn interest on your investment. James, an experienced investor, decided to dive into tax lien certificates within his SDIRA. Over the years, it's been a consistent income generator. Now let's talk strategy. How do you actually balance these assets in your SDIRA? The goal is diversification. Don't put all your eggs in one basket, especially in an account as important as your retirement. By combining real estate, precious metals, and even some high-risk investments like startups or cryptocurrency, you create a well-rounded, resilient portfolio. And here's where the power of tax benefits comes into play. With a self-directed IRA, you're investing in these assets tax-deferred, traditional SDIRA, or even tax-free, Roth SDIRA. So, whether you're growing wealth with rental properties or generating income through precious metals, the compounding growth isn't taxed, making it a powerful tool for retirement. Real-world application. Imagine you're like Noah, who's 50 and planning for retirement in 15 years. He's seen the traditional stock market approach and decided to take a more diversified route with his SDIRA. He invests in a mix of real estate and precious metals, while also allocating a small portion to cryptocurrencies. This approach gives him steady income from the real estate, hedging against inflation with metals, and high upside potential with crypto. By the time he retires, his SDIRA is not only diversified, but has also given him a substantial nest egg. Let's wrap things up with some practical takeaways. 1. Understand your risk tolerance. Whether it's real estate, private equity, or crypto, make sure the investments align with your retirement goals. 2. Diversify. Diversify. Spread your investments across different asset types to minimize risk and maximize potential. 3. Always consult a professional before making any major decisions. SDIRAs have specific rules, and professional guidance will ensure you're on track. So what's the first step you'll take toward diversifying your SDIRA for retirement? Let us know in the comments. Thank you for joining us on Factful Finance. If you enjoyed this video and found the information useful, why not hit that subscribe button? That way, you won't miss out on more tips to help you secure a prosperous financial future. And while you're at it, click the bell so you stay updated on our latest content. We think you'll find the video on screen next really interesting. It might just help you take your retirement planning to the next level. Keep building that wealth, and see you soon.